Hey folks, so in this video I wanted to do a technical deep dive. Now, before I jump into that, I just do want to talk about one quick thing. So right now I'm on the EIA website. This is the United States Energy Information Administration, and we all know that we got CPI coming up here. So one thing that I like to look at right before CPI hits is I like to look at United States retail average regular gasoline prices. So we're going to be reporting April data in May. So we want to look at gasoline prices in April. So right here. So as you can see, coming out of the end of March, we were looking at $3.42. And then this went up to $3.50, $3.60, and then $3.66. And then we ended the month of April at $3.65. So, obviously in the month of April, gasoline prices did go up. We went up over 20 cents from the end of March. So I don't necessarily expect inflation to come down a whole lot. Maybe it might come down a little bit. But, I do think that the rhetoric is going to be, oh, you know what? Inflation is a little bit stickier than we thought. I mean, this report, it still isn't showing inflation coming down as meaningfully as we'd like it to. So, I do want to make it clear that this is just one sector, okay? But this one sector, gasoline, this runs through the entire economy. That's why I do like to look at this data. So moving on, we're going to go straight into the technicals. So one thing that's a little bit different is in the past, we were looking at ZQH23 minus ZQZ23. So that was the March Fed Funds futures minus the December Fed Funds futures, but now we're in May and we got that Fed interest rate hike. So we're going to be looking at a different Fed Funds futures contract. So we're going to look at ZQK23. So ZQK23 is basically saying the May contracts. So if we're taking the spread between the May and the December contracts, if we're just looking at the bid ask, it's about negative 0.6. So that is implying 2 rate cuts. So the Fed Funds futures is still calling BS on Jerome Powell, saying, hey, you know what? You guys aren't going to hold. You're likely going to cut twice by the end of the year. But keep in mind that this data fluctuates quite a bit. And, obviously, when we get closer to December, it's going to be a lot more accurate. So let's go ahead and let's look at the Qs. So one thing I do want to talk about for the Qs is that I have this anchored VWAP from the all-time highs. Now, if we're just looking, we have just literally just been bouncing back and forth between this. So I'm going to go ahead and zoom in on that so you guys can see a little bit more clear. So you can see, bounce slightly below, retracting. So it's acting as a magnet. So you can see more recently, we did a strong bounce off of this. We're starting to peak out of this rising wedge structure. So let me zoom out again so you guys can see that structure. So let's go on that 10-year one day. Let's zoom out here. So there you guys go. We got this resistance right here, support right there. Now, I do want to look at a shorter time frame. So if we are looking at the 30-day, 30-minute time frame, you guys can see that we have 3 gaps to downside. So things are getting a little bit risky here. So in the past, when we did get above this resistance line, we quickly fell back in. So, obviously, we got these 3 downside gaps. So that's a lot of risk at this point in time. So let me go ahead and list these gaps out for you. So we got one that's going to close at 316.50. We got another one at 312.31. And we got another one right here all the way at 307.26. So, this could be kind of risky here. So definitely do watch out. So one other thing that I want to look at is let's go ahead and let's look at RSI. And let's look at MACD. So this will kind of give us a better understanding of where we're at. So if we're just looking at RSI right now, and let's go ahead and flip back to the day time frame. So RSI isn't terribly frothy. It's right at 60 readings. So, if it was going to get frothy, it'll get all the way to 70. So, there might still be a little bit more room for upside, but, I think there's not a whole lot of room for upside before we get some sort of pullback here. Now, if we are looking at MACD, let me go ahead and zoom in here. So right now, MACD, it does look like it wants to flip bullish. So that's that blue over the yellow. But sometimes, you know, MACD can be kind of tricky. It can be like this point right here, where it did look like we were going to flip back over, but then we kind of rejected. So the same thing could happen right here. So I would caution you, especially with these 3 gaps to the downside. So that's basically what I'm seeing in the Qs. Now let's go ahead, let's move on. Let's look at the SPY. So same deal, you know, I got this anchored VWAP right here, and let's just go ahead and zoom in and see what that anchored VWAP is at. So that anchored VWAP is right around 407.68. You can see that this has been a pretty strong area of support right here. There's been times where we momentarily broke under it, but we quickly snapped back up. So let's go ahead, let's look at a shorter time frame. Let's just see where some of these gaps are. So we got this one right here, and this one, I think this was like FOMC day or something. This one, if we want to close this upside gap, we got to go all the way up to 415.55. Now we got 3 downside gaps right here. So this one, and that one. So if we want to close this first gap right here that came about after Apple earnings, we got to go all the way to 405.28. Then the next one is at 401.32. And then right below that, we're looking at 395.70. So let's go ahead and let's go back to the day time frame. And let's just pull out the MACD and the RSI as well. See how things are faring here. All right, so if we're looking at RSI, we have a 55 reading. So, you know, this isn't overbought. It's not oversold. It's just kind of sitting in the middle here. And, you know, that kind of makes sense because we have these upside and we have these downside gaps. So if we were to fill that upside gap right around 415.55, then yeah, this RSI could inch a little bit higher. So I do think maybe SPY could have potential upside, possibly, you know, especially if we do fill this gap and then we do a little bit more, then yeah, that's definitely possible. But, you know, there is 3 downside gaps. So I do caution you, it's very similar to the Qs. And if we are looking at the MACD, MACD, it's kind of looking like it almost wants to get back above the signal line, but not quite. So we could have a similar situation like this right here where we do reject. So this is kind of where, you know, things get a little bit tricky, you know, when we have upside and we have downside gaps. So definitely do be cautious because like I said, we do have more downside gaps than we have upside gaps. And another thing that I do want to talk about is most of the earnings are in. And we have some major upside, or we have some major downside gaps on a lot of these earnings. So it wouldn't surprise me that now that most of the earnings are done, that we are going to see some consolidation of these massive moves. And maybe we do see some money being rotated into some other sectors, you know, maybe the cyclicals. So definitely do be a little bit cautious here because, you know, coming into May with all these massive earnings gaps, you know, we could consolidate and, you know, maybe some of these gaps get filled. So definitely do be a little bit cautious here. Now, let's go ahead. Let's move on. Let's look at Tesla. So Tesla is a little bit interesting here, and we're going to go a little bit more in depth on Tesla here. So I'm going to go ahead and just get rid of this line because it's irrelevant now. Now, we have these anchored VWAPs. You know, we got several of them. So we got this one right here, and we got this one right here. Now, these 2 anchored VWAPs are likely going to act as strong resistance. So I do want to zoom in on the price action right here. So let's just go ahead. Let's zoom in on that. So I do have this Fibonacci retracement. So right there, you know, that's our low, that's our high. So if we are looking at this, you know, we did have this retracement right around here. So that 160 level, you know, that was right around the 50 retracement line. So right there was kind of acting as support. We quickly dipped underneath that, as you guys can see. But then now we're kind of coming back up to this level right here. So if we're going to this next fib retracement level, that's going to be right around 174. So you guys can see that that's kind of coinciding with these anchored VWAPs. So there is a lot of resistance around this area. So let's go ahead. Let's go over to a lower time frame. So right here, I want to look at the 30-day, 30-minute chart. So right here, we have this downside gap right there. So if we want to fill this gap, that's right around 161.55. Now do note that we do kind of have this reverse head and shoulders like structure, but it's very gappy. You know, we got this gap right here, and we got this gap right there. So this does kind of look like it could be an inverse head and shoulders, but you know, I would definitely caution you just a little bit because like I said, you know, we got this fib retracement right there, as well as those anchored VWAPs that are all kind of lining up right around this 174-ish area. So definitely be a little bit cautious here. It's entirely possible that we just rally past this momentarily and then we fill that gap and then maybe we come back and then we hit this level. And then if that does happen, just watch how we react around this level right here. You know, are we just going to knife underneath it, or are we going to rebound and then are we going to rally back up? So that next level, you know, if we do get past this level, we do get past this gap, we're looking at 190.93. So as of right now, you know, like I said, we have this downside gap right here. We got this upside gap right there. And then when we zoom out, we got that massive gap right there. And that massive gap, you know, it's going to get filled right around 146.16. So it's still very possible that this gap could get filled. But like I said, right about now, it does look like we do kind of want to go up to that 174 area. So that's basically what I got with Tesla right there. And let's just go ahead. Let's look at the moving averages real quick too. So we got the 50 at 182.45 and we got the 200 at 208.45. So we're not very close to any of those. So now let's go ahead. Let's move on. Now we're looking at Meta. So Meta, I think, is a little bit interesting here. So we got these anchor VWAPs right here. So we got one from the all-time high. We got one from the right before COVID crash. And we got one right at the COVID crash at the lows right there. So, you know, we can see that these two anchored VWAPs are kind of moving right around this area. So let's just go ahead and see right there. It's right at 220.72. We are at 232.78. So I do want to note that, you know, when I did put this Fibonacci retracement from the top to the lows right here, we do have this fib retracement level. It's the 50%. It's at 235.14. You can see that we're not quite holding that right now. We're underneath that right now. So, you know, this could act as resistance right there. Now, if we're just looking at that next fib level, that's going to be all the way at 243, but we do have these anchored VWAPs right there. So if we're looking at the all-time high anchored VWAP, this one's kind of lining up with this 38.2 fib retracement level. And these two anchored VWAPs right there, you know, if we do knife underneath that, then, you know, I wouldn't be surprised if we hit this 200 level right there. So let's just go ahead. Let's zoom in a little bit. So we do have the support trend line. And I do think it's very possible that we just come back down and retest that support. So that does match up with those anchored VWAPs right there, right around 220. And, you know, as time moves on, you know, if we don't quite hit this trend line right away, you know, this trend line is upsloping. So, you know, it could hit like up here, maybe like 231 or something, and then rebound. But if at any point in time that this trend line is broken, I would be just a little bit cautious. Because look how far this goes back. So this goes back several months here. And, you know, if we do invalidate this, I think we could have a sizable pullback. And then, you know, we're going to start trying to develop a new trend. And, you know, sometimes that gets a little bit hairy. You don't necessarily want to be caught in the crossroads being a bull when you're trying to establish a new trend, especially after, you know, a very steep trend has broken. So definitely do be cautious if you are a bull, if you do see us breaking underneath this trend line right here, because we could have a sizable dip. Now, let's go ahead. Let's move on. Let's look at Microsoft. So Microsoft is pretty crazy. So right here, you know, I have this Fibonacci retracement all-time high to all-time bottom. And right now, honestly, it looks like it wants to go up to this 320.39 level. But, oh boy, like, this has had some crazy moves. It's breaking out of this rising wedge. It could entirely hit this level, and then, you know, it could just reject, and maybe it does a hard pullback. But let's go ahead. Let's look at RSI as well. I'm a little bit curious on that. So if we're looking at RSI, yeah, it's at 69.35. I would not be surprised if we have some form of pullback right here. So do be cautious because the RSI is getting very frothy on Microsoft. Now let's go ahead. Let's take that off. Let's look at some other stuff here. So let's just go on a lower time frame. Let's look at the 30-day, 30-minute. So as you guys can see, we have this massive gap from earnings. I actually thought that Microsoft earnings was pretty good, but you know, the multiples are still a little bit frothy, so I'd definitely be a little bit cautious there. And you know, if we do want to fill this gap, that's going to be 276.17. I'm not quite sure if we're going to fill this gap in the near term. I think if we were to fill this gap, it might take, you know, like a quarter or something, or you know, the market would seriously plunge if we were to fill this gap right here. So definitely do be cautious of that. All right, now let's go ahead. Let's look at the next ticker. Next ticker is Apple. So Apple has a lot going on. But the one thing that I do want to note is that, you know, we have this rising wedge right here. We have this prior support trend line, and it was supposed to act as future resistance. We got these this resistance right here. You know, you can see top. We're above that. So we're above all of these resistances right here. So let's just go ahead. Let's look at MACD real quick. Or not MACD, I mean RSI. So I'm thinking it's probably going to be a little bit frothy here. So surprisingly, you know, it's not at 70. It's at 67.6, which is still pretty frothy. It could get a little bit higher maybe. Maybe it could hit that 70 level. But once it hits that 70 level, do watch out. You know, you can see in the past, you know, when we did hit these 70 plus levels, we had some massive pullbacks. And you know, right now this move on Apple, it's pretty serious. We've had a pretty serious run on Apple. If at any point in time, let's go ahead and take out this RSI. If at any point in time we do crack underneath this support trend line, oh boy, I think the pullback is likely going to be very sizable. So let's go ahead. Let's look at a lower time frame. Let's look at the 30-day, 30-minute. So, you know, similar to QQQ, Apple has 3 downside gaps. It's got this earnings gap right here. If we want to fill this one, we got to go all the way down to around 165.93. We got this gap down here. If we want to fill this one, you know, we got to go down to around 160.13. And then we got this gap right here. It's to fill this one, we got to go all the way down to 157.81. So, you know, there's a lot of downside risk here, is definitely what I want to emphasize here on Apple. And the RSI, it's pretty high right now. It's not super frothy, but it's getting there. So watch out. Now, let's go ahead. Let's move on. Let's look at Google. So if I'm looking at Google right now, you know, I can clearly see, you know, I have this anchored view up right here from the all-time highs. This one's set at 113.46. So we're not quite there yet. We're at 106.21. So we're a ways away. And I do have this fib retracement right here from the all-time high to the low right there. So if we are looking at this, we're finding some resistance right here at around this fib level right there, that 38.2 fib level. And that's right around 109.58. So you can see resistance right there and right there. And right here, it almost quite got there, but not quite. But one interesting thing that I do want to note is that we are getting this golden cross scenario on Google. So we have this 50-day moving average crossing back over this 200-day moving average right here. So yeah, that's a golden cross scenario. Now, one other thing that I do want to note is that we had this resistance trend line right here. We are above it, and we pretty much retested it right there. So, you know, right now, Google's not looking terribly bearish. But if we do get above that fib level right there, I do think we could see quite a pump right there. Because, you know, this was prior resistance right here. Or it is current resistance, I mean. So definitely do watch out for that. Now, let's go on a lower time frame right there. So I want to go on the 30-day, 30-minute. So right here, we have this upside gap. And if we want to fully fill that, we got to go all the way up to 109.38. So watch out for that right now. So like I said, we have that golden cross scenario on Google, plus we have this upside gap. It would not surprise me if we go and we fill that. So now let's go ahead, let's move on. I want to look at Amazon next because Amazon's definitely a little bit interesting here. So one thing that I do want to point out, let's just zoom out a little bit. So if I am looking at Amazon right here, we do have this resistance trend line, and this one's a little bit interesting. So you can see it right there. It was resistance right there. It was support right there. Basically, it's going through this gap right here, resistance, resistance. And then you can see that right here, we formed this new gap right there. And then when we got back below that, you know, resistance again, resistance right here, and resistance right there. So you want to pay attention to this resistance trend line. I think if we do get above this, we could have a sizable run on Amazon. So one thing I want to note on Amazon as well is right now we're at 105.65. We have this 200-day moving average right at 106.53. It lines up with this fib retracement level, the 23.6% fib retracement level. So right here, you know, this is at 106.55. So, you know, I do think if we get above that 200-day moving average, we're likely going to see a pop, especially if we could get above this trend line as well. So, you know, that next fib level is right at 122.14. It happens to line up with this all-time high anchored VWAP right there as well. So some very interesting things going on Amazon. I would definitely be watching out for that 200-day moving average and this resistance trend line, because if we do get above that, you know, I think I would not surprise me that we just rally all the way up to 122.06. So definitely watch out for that, you guys. Now let's go ahead, let's move on. Let's look at the dollar. So DXY, you know, it's a little bit interesting here because we have several upside gaps. And, you know, I've talked about this trend line in the past. So let's go ahead, let's look at the weekly time frame, so the 10-year weekly. So this trend line right here has been a long-term support. And, you know, we momentarily went underneath this. So, you know, we're basically just consolidating right around this area right here. So let's go back to the 10-year day chart. So you can see right here, we're just kind of consolidating around, but we also have this resistance trend line right here. So things are about to get interesting on the dollar here, because right now we're in this wedge right here, this wedge formation. And, you know, we're either going to crack below or we're going to crack above. Now, if we do crack above, I mentioned we have these 4 upside gaps. So I'm going to go ahead and show you those gaps. So we are going to go on the 90-day, 1-hour time frame. So we got this gap right here. If we want to fill that, we got to go all the way up to 101.94. There's one right here. We got to fill it at 102.55. There's one right there. 103.65. Another one right here, 104.37. And another one right there, 105.63. Now, usually when I see gaps on DXY, they tend to get filled pretty quickly, but these ones have not been getting filled. And I think it's really just because this economic data has been coming in a little bit weak. But I'd be watching out for some sort of catalyst where, you know, if we're measuring against other currencies, that the dollar will come out strong. So definitely watch out for some headline news on basically FX. So let's go ahead, let's move on. And let's look at the VIX here. So this is going to be the last one we're going to look at here. All right, so the VIX. So I've been talking about this for a long time, but we have this resistance trend line right there. We have this long-term support trend line right here. And let me just show you how long-term that is. So yeah, it's going all the way back here. So yeah, this is very long-term support on VIX right here. And right now we're slightly below that. So I'm going to go right here. I'm going to zoom in on current price action. So as you guys can see, we're slightly below that. But you can see that we're kind of just messing around with this. We're going back and forth. And we're deciding if we want to break underneath or if we want to crack above. So let's go ahead. Let's look at a shorter time frame. I'm going to look at the 30-day, 30-minute. And this is why I'm kind of telling you to be a little bit cautious here, because right now we do have this upside gap on VIX, and we tend to see gaps on VIX get filled pretty quickly. Usually I've seen it like 2 or 3 days. And if we do have a runaway gap, it tends to be a runaway gap for a while. And I'm talking about like a runaway gap that lasts more than a month or something. So, we had this downside gap right here. I wouldn't be surprised if we go and we fill this right away. And then we have this upside gap right there. So this downside gap right there on the VIX, that's going to be at 1614. And this upside gap is going to be at 1951. So, maybe we just squeak up a little bit higher on SPY or something. And then maybe come CPI, maybe it's not as favorable as people want it to be. And then we see a little bit of a dump on SPY, and then this gap gets filled. So that scenario would not surprise me. I'm not saying that's going to happen, but I'm just saying that, right now the VIX has 2 gaps, one to the upside, one to the downside. So expect just a little bit of whipsaw here. So that basically concludes my technical analysis. Now, I do want to bring you guys a separate video on the expected moves, just because right now, I didn't quite have all the time to construct that. It does take a little bit of time. So I did want to get this video out first, just so you guys can see this. And then down below, a little bit later, I'm going to go ahead and link the video to the expected moves for this upcoming week. So I hope you guys enjoyed this video and have a good one.